Good afternoon all, and thanks for joining us today for this webinar by Brodie's on fraud in the current climate. It's a webinar by the Corporate Crime and Investigations team. So speaking today myself, Paul Marshall, and my colleagues Ramsey Hall and Tony Comfrey, we're all members of the Corporate Crime and Investigations team at Brodie's. We specialise in particular in financial crime, the investigation of financial crime and protecting clients against being victims of financial crime. So let's look at our agenda for today. We're going to look at fraud in particular today, focusing on fraud in the current climate, how to respond to fraud concerns when they do arise, but also of importance to protect against fraud arising in the first place. The seminar is focused today on organisations, and those could be businesses or local or public authorities or charities or other organisations, but certainly our focus is on protecting that group against the risk of fraud arising in the organisation, and also certainly dealing with fraud investigations in the event an issue does arise. So with that introduction and being alive to the fact that there's an increased risk of fraud right now, I'll pass on to my colleague Ramsey Hall, who will begin for us today. Ramsey.
Thanks, Paul, and good afternoon, everyone. I'm going to kick off by asking what we mean by fraud. That might sound like an existential question, but in reality, what we want to do is talk through the various forms of fraud. So if we can move on to the next slide, we can see that to help answer the question, we can look to the news. Fraud instances are reported on an almost daily basis across the UK and indeed internationally. And if you imagine for a second that I'm Hugh Edwards presenting BBC News at 10 p.m, I'm going to talk through a day in the life of fraud reporting. So first at the top left-hand corner, we have the Serious Fraud Office charging senior individuals of an organisation with fraudulent trading for falsifying the company's accounting position to induce a bank to fund the purchase of steel. We then move to the top right-hand corner, in which an accountant called Stephen Day was appointed as a director and financial director of various organisations. He used his position to remove funds from their accounts and attempted to hide the trail by creating false ledgers. The bottom left-hand corner in the Enviro example, two company directors made false claims about the value of carbon credits to induce members of the public to purchase them. The directors made approximately £36 million through the fraudulent conduct. And finally, in the Peebles Media case, the business took action through the civil courts to attempt recovery of six-figure losses after an employee paid funds to a fraudster who impersonated the company's managing director and instructed payments to a personal account. A key part of the evidence was that the employee had ignored a fraud warning on the company's online banking system when arranging the payments. And I think there are two key points to take from these news items. The first is that fraud is happening on a regular basis. And the second is that fraud is often reported in the media. So it will be important to have a clear process for managing press interest as part of any fraud response plan. We're then going to move on to the legal definitions of fraud north and south of the border. We're going to do that because, just as there will be at Wembley this Friday evening, there's a difference of approach between Scotland and England. So taking Scotland first, fraud is a common law crime of a practical result caused by a false pretense. To give you an example of that, in the Enviro case I mentioned just now, the directors falsely inflating the value of goods they were selling is the false pretense, or the lie, and the purchase of those goods, and therefore the gain made by the directors, is the practical result. A wide range of conduct can be caught by the legal test, and false pretense and practical result have been interpreted broadly by the Scottish courts. If we can then move on to the position in England, the fraud scheme in England is governed by legislation, mainly the Fraud Act 2006, which contains three overarching fraud offences. The first one is fraud by false representation, and there's an example of that on the screen. Another example would be the accountant Stephen Day case that I mentioned, because part of his criminal conduct was misrepresenting to three NHS trusts that he was only employed by one of them, whereas in reality, he was working for all of them full-time simultaneously. The second type of fraud in England is failure to disclose where there's a duty to do so. An example of that would be that an insured company makes a claim for property they believe they've lost. They later found out that they haven't lost the property, but don't tell the insurers, and they accept the insurance payout. That would be a fraud by virtue of the failure to disclose. And the third example is abuse of position. And this could be constituted where a senior manager uses his position to create false invoices to be paid to his own account. It's also worth noting, just before we move on, that there's standalone legislation for certain frauds, such as the fraudulent evasion of different kinds of tax. Those tax evasion offences apply both in Scotland and in England. And in the next slide, I'm covering three examples of fraud that we regularly see impacting businesses. These are the three I's, as we very imaginatively badged them. The first is identity fraud, and this would be where a fraudster steals the identity of a legitimate business and uses it to obtain goods, money, or services. The second is internal fraud, and this can be committed in a couple of ways. First, false or inflated expenses claims are made by staff. Second, employees use confidential company business for personal gain. The third I, and the last I, is invoice fraud. And again, this can be committed in a couple of ways. The first is a genuine supplier submits false or inflated invoices, impersonates a genuine supplier and submits false invoices in their name. And just to flag now, we are going to focus on the idea of frauds within the supply chain throughout the rest of the presentation. And with that in mind, I'm going to hand the baton over to Tony, who's going to cover some current fraud trends. Tony, over to you.
Thank you very much, Ramsey, and good afternoon, everybody. So we'll start with talking about the effect of fraud in the current climate. So as we see in the slide, it's fair to say that the climate we find ourselves in has had a very significant impact on fraud, and we'll come on to discuss the reasons for that. So what are the reasons? Well, the first reason we suggest is the economic disruption that's been caused to corporates and other organisations. The effect of that disruption has been, quite understandably, to divert some of the focus of senior leadership, and in those circumstances, fraud prevention may have slipped down the boardroom agenda. And in those circumstances, the fraud becomes more of a risk for organisations. Economic disruption is also relevant for individuals because, as we all are aware, the effect of COVID has been felt in individual pockets as well as that of organisations. And as ever, when there's economic difficulties, this represents an increased driver for individuals to engage in fraudulent conduct for financial gain. There's also some COVID-specific reasons. So COVID has caused a greater use of new technologies amongst organisations. And with this widespread uptake and unfamiliar tech comes greater risk for organisations and the opportunity for fraudsters to devise and exploit new models to perpetrate frauds. And finally, on a very practical level, the rise of home working that's been associated with the pandemic has necessarily led to reduced levels of supervision of staff. And in those circumstances, there's more risk and more opportunity for employees to be involved in fraudulent conduct, the kind of insider fraud that Ramsey discussed. So how is the perfect storm that we talked about manifesting itself? Well, on our next slide, we talk about some of the fraud numbers. So there has been a significant increase in fraud instances, and the impact has been felt across sectors, and particularly in those sectors that were already at a higher risk of fraud. So that includes, as we see in the slide, financial services, food and drink, construction, oil and gas, and the public sector. And that's worked its way into the numbers. As of October 2020, the National Audit Office valued fraudulent access to the COVID support schemes of approximately £4 billion. Now, we're now some months on from October 2020. No fresher statistics from the National Audit Office, but it's fair to say that number can be expected to be quite significantly larger now. And it's not just access to COVID support schemes. In the year 2020, the number of impersonation frauds, such as those we heard about at the start from Ramsey, almost doubled to 39,364 recorded cases. And we also saw a 42% increase in investment frauds between the years 2019 and 2020, valued at £135.1 million. So we've seen the climate and we've seen the numbers. And so what have the regulators been doing about the difficulties that we find ourselves in terms of frauds? Well, there are four main regulators with an interest in fraud. They are HMRC, the Financial Conduct Authority, the Serious Fraud Office, and in Scotland, the Economic Crime Unit, which operates within Police Scotland. So HMRC is responsible for the investigation of fraudulent evasion of tax, as Ramsey, those offences that Ramsey mentioned at the start. These have continued to receive key focus from HMRC over the course of the pandemic, although in recent months, HMRC has been turning its attention to some of the fraudulent access to COVID schemes that we've talked about, and we can expect that to be an area of increasing focus as the months go on. The Financial Conduct Authority exists to regulate financial services. Its key area of focus over the course of the pandemic and in recent months has been preventing investment frauds. That's manifesting itself in a variety of ways. So there's increasing expectations from the FCA for social media companies to be protecting against their platform being utilised for investment fraud to be perpetrated. And the mood music coming from the FCA is one of an increased appetite for regulatory enforcement, and we expect to see more of that in the coming months. The Serious Fraud Office, clues in the name, its principal purpose is investigating and, outside of Scotland, prosecuting serious and complex frauds. It's continued its work over the course of the pandemic, concluding 3 deferred prosecution agreements, which are agreements whereby organisations accept unlawful conduct and in return require to make payment of a financial penalty. They also have been utilising the failure to prevent offences and carrying out investigations under that legislation. Failure to prevent offences are offences that impose positive obligations on organisations to prevent their organisations being used in connection with bribery and also in connection with the facilitation of tax evasion. And if you're interested in that, my colleagues will be discussing it in a couple of weeks. Finally, the Economic Crime Unit. It is the specialist unit within Police Scotland dealing with financial and economic crime. It's an entity that we have strong relationships with, built upon a number of investigations that we've been involved in. And their focus in recent months has been contributing to a new centre of excellence to deal with online frauds and cyber attacks. So we've heard about the climate, we've heard about the numbers, and we've heard about the regulators, but what have we been seeing? Well, as we discuss on the next slide, a key offence or a key fraud that we've been considering and that we've been involved in investigations in is supply chain fraud. So what is supply chain fraud? Well, it's very simplest. It's fraudulent conduct by the supplier of goods or services, but that can manifest itself in some slightly different ways. So there's the example of invoicing fraud. So someone supplies false or inflated invoices for work for work that hasn't been done or services that haven't been provided. Then we have the more qualitative type fraud where someone holds goods or services out as meeting certain quality standards, but they do not in fact do so. And third, we have a more broad concept of supply chain fraud, corruption of the supply chain, where, for example, bribery in a procurement process can result in appointment of an inappropriate contractor, which thereafter opens the way to fraud further within the supply chain. And it's that concept of corruption of the supply chain that we're going to discuss in a bit more detail. And I'll hand over to Paul on that.
Thanks, Tony. And before we get into the next part of the session, just a quick reminder to everyone on the webinar that please do post any questions that you have for us, and we'll come to those at the end if we have some time to do that. So next, once upon a time, so probably start by saying for those who attend our sessions on a regular basis, you'll know we like to have a thrilling, highly entertaining, hilarious case study to present to you. We didn't have time for that, obviously, this time, so we've just come up with something that's the best we can do in the circumstances, but hopefully it will have you on the edge of your seats and will imagine you all rolling around in laughter as you hear what comes next. But this case study is a grossly simplified example of a supply chain fraud, but it is based on themes that we see time and again in instructions that we're involved in as a team. And one of the key themes that it highlights is the link between fraud and bribery. So with that teaser, let's look at the case study. It's about a company called Three Little Pigs Construction and its work with the council, a fictitious council called Caledonia Council. So we can see here that the council goes out to tender for the design and build of a community hub, which will be called the Convery Hall. And that's a dedication to Tony Convery and Ramsey Hall, who are clearly both very important members of this local community. So the council wants Convery Hall to represent the past, the present and the future of the community, and it appoints the big bad wolf to manage the tender process for it. On the wolf's recommendation, the council appoints Three Little Pigs Limited, a UK construction business, as the main contractor. And TLP, they say, well, we've got a range of building experience. We can access a wide range of building materials to reflect the council's vision. And before we move on, just to say our sincere apologies so far for the quality of this case study. Now let's move on. Once the construction begins, concerns start to arise with the quality of TLP. The progress is slow, the costs are high. The wolf who has backed TLP for the work is reassuring Caledonian Council that they have the experience and expertise to get the job done. To give that reassurance, he volunteers to do a line-by-line review of TLP's costs and to do a spot check, a surprise spot check at the site. He does the line-by-line review and he confirms the costs are slightly above the budget, but this is all to do with the high quality of the materials that have been used. And he is going to arrange a site attendance, but the council are not really relaxed. And so the council leader also insists on attending at the site visit. So what happens next? The big bad wolf and the council leader attend the site. There's three elements to this. The main hub building is called the Brick, and it's found to be of a solid construction. But the wood shack, which is an extension, which is designed to transition from the main building to the natural world. When the council leader looks at that and presses on the side of the building, his hand goes right through what's clearly rotting wood. And then there's this nice concept of the straw man, which is a sculpture of an agricultural worker. It was supposed to be carved from the finest marble, but in fact, on close inspection, it appears to be molded from rather rough concrete. And we know that the big bad wolf had recommended and defended the Three Little Pigs here in being appointed to the job. So he has some questions to answer. Let's look at that next. So the case study is, as I said, it's simplified, but it's designed to give you a feel for the issues that can arise and put you in that position of what do you do once you have a concern. So there's some immediate issues for Caledonian Council here that they need to get a handle on very, very quickly, having looked at the quality of the work that's been done so far. Ramsey, do you want to tell us and speak to the group about what you see as the immediate issues for the council, having seen what we've seen so far?
Yes, happy to. Thanks, Paul. So I suppose just to preface what I'm going to say by pointing out that, as the slide says, the action taken in the first 48 hours of an incident like this really is crucial and can have a significant impact on the outcome. But Paul, you asked about the issues facing the council, so I suppose I should go through those. First one, I think the council will want to understand is what's happened. Why is it that the wood shack and the straw man aren't what they expected and instructed? It appears to me there's been some sort of fraud involving the big bad wolf in holding out the expertise of Three Little Pigs and the quality of the materials they were going to be using. That to me requires further examination. I also think the council would want to consider who is responsible. Is the bad actor just Big Bad Wolf? Are Three Little Pigs involved? What about subcontractors of Three Little Pigs? Linked to that, the council will also want to try to identify who has benefited from the fraud and separately who has facilitated the fraud. Third, they would want to investigate the value of a fraud. This is a key element. How much money has been lost? I say that particularly in this circumstance, where we're dealing with public funds. How much of the council paid out and where do the funds currently sit? That's important if steps are to be taken to freeze and recover the assets. And I suppose, Paul, the final point I would make is that the council would want to confirm whether the fraud is stopped or whether there's an ongoing concern. And just to throw a question back at you, if it's ongoing, what sort of steps do you think the council should take to address that ongoing concern?
Yeah, really, really helpful, Ramsey. Let's pull up those the Ramsey bullets, so to speak, so that we can see how he's reviewed this. All of these points are really important to get a hold of it. That last point, which is this an ongoing fraud? Has it stopped? Really crucial. And one of the key parts here is going to be to look at the role of the big bad wolf, because if he appears to be a gatekeeper, a facilitator of the fraud, the first step is to understand his role and to understand how he has allowed others in, so to speak. So I would be thinking very early on, how are we isolating the big bad wolf? How are we going to manage the extraction of information from him? I'd also be thinking about what evidence, what documents do we need to recover before we get to the stage of asking him questions. Maybe on that's a nice link into something for you to think about, Tony. What would be, after all these questions that Ramsey has raised here, what would you see as the immediate actions that the council should be taking in the first 24, 48 hours here?
Thanks, Paul. So we've got lots of questions, and questions need answers, and a way to arrive at those answers, or to seek those answers at least, is for an investigation to be carried out. Now, investigations are complex, and so the first thing that I think the council needs to do is pause and consider whether it needs professional advice before engaging in an investigative process. Thereafter, if minded to commence an investigation, the first thing the council needs to do is work out who's going to investigate it. It needs to be someone that the council can rely upon, someone within the council that has the expertise, the seniority, and the capacity to carry out an investigation into what is likely to be a sensitive matter with potential wide-ranging ramifications. The next thing that I think the council needs to think about is preserving the evidence you've talked about, Paul. So are there emails with Big Bad Wolf where he's given particular assurances? Are there particular hard drives that data is stored on? The council needs to think how that evidence can be secured so it can be used in any future investigative process. And the third thing I think that the council needs to think about is consider who has information about this process, who will be able to tell the council what's happened, and what steps the council needs to take in order to get that kind of information. So those, I think, are the initial considerations for the council. Great,
that's really helpful, Tony. And let's pull up those first actions there. A really good summary for everyone on the webinar to take away in terms of the thought process to go through before you begin. Let's imagine that all of that has been discussed and agreed internally in the council, and material evidence has been recovered, and we're going to that position of speaking to the gatekeeper here, speaking to the big bad wolf to understand what has happened. Let's look at that next. So the big bad wolf, Storytell, he's interviewed by an investigation team. What does he say to them? Let's have a look at his story here. Me and the Three Little Pigs go way back. I owe them a big favour from a job that went wrong once upon a time. I agreed to approve inflated invoices for these materials. I knew that the wood and concrete were of very poor quality, but the Three Little Pigs needed to make some savings. And of course, the self-interest here of the big bad wolf, they promised me a taste of their margin, so it was in my interest to help them out. And again, that's a grossly simplified version of what we often see, which is somebody facilitating a fraud who has been promised something, either been promised something, some gain, or they're being threatened with something if they don't assist the fraudsters here. So again, we're on nursery or fairy tale stuff here, but this is exactly the type of language we'd expect to see from a fraud facilitator in the real world. So taking that information, we now can see that there is a planned fraud. The Big Bad Wolves facilitated that. Three Little Pigs are in it up to their neck, so to speak. Let's look at what would be considered next. So what would we do on the internal investigation? Let's look, what would be the benefits of conducting a full internal investigation here? We've had the Three Little Pigs identified by the Big Bad Wolf. Big Bad Wolf is someone very close to the council, a project manager for the council, so we have control over him, but we start thinking about going to external parties, suppliers, contractors. That creates some risks, doesn't it? Ramsey, tell us what's a good reason, or what are the benefits of conducting an internal investigation here?
So I would say from experience, or we would say from experience, that there are several benefits to conducting investigations. And the first is the one that we've talked upon, but it's a fundamentally important point. Investigation is the framework by which an organisation can understand what's happened. Once you have established what's happened, and if we've seen that Big Bad Wolf has squealed and explained what's gone on, the council's in a position to take an informed view on its next steps. That might include reporting to the specialist authorities that Tony spoke about earlier, raising a court action for recovery of the losses, as well as, or instead of, raising disciplinary action for staff members that were found to be involved. The second benefit, I suppose, Paul, would be that it helps the council identify any compliance system gaps. And if we go back to the case study, there are two big compliance questions for me that the council should be asking themselves. First one is, did they do sufficient due diligence on Big Bad Wolf before appointing them to conduct the tender process? And the second question is, should the council have allowed Big Bad Wolf to do the line-by-line review of the Three Little Pig costs, bearing in mind that at that stage they had concerns about Big Bad Wolf? An internal investigation, in our experience, allows an organisation to answer those questions and take action necessary to update internal compliance systems and controls. And my final point would be the benefit of an investigation is that regulators may require and expect an investigation. The same can be said for other stakeholders. They can expect investigations to be carried out because they send a message that something is being done to address the loss and address what led to the loss. And I would make the point again that when it comes to public money, so when I'm dealing with public authorities here, that's particularly important. So those, Paul, would be my benefits of conducting investigations.
Thanks, Ramsey. Well, one other really helpful, point which you were touching on there, which I think is certainly worth really emphasising to everyone attending today, is if there's a concern that someone within the council feels that they are not wholly independent of this. So Big Bad Wolf is the project manager or consultant brought in by the council, yes, but if there's someone in the council who's actually appointed Big Bad Wolf, that does put you in a position where the people in the council in that situation, with the best will in the world, they can't look at this completely objectively because they'll be concerned about whether their own decision making or judgments might also be questioned. So really, often the best option in that situation is to have absolute certainty that the team looking at the concern are independent of the process. That can still be within the council, of course, but it's really important that it really doesn't touch on council members or council operatives who could in some way have an interest in the outcome of the investigation. So next then, let's look at, carry on with this discussion about the investigation. And Tony, one for you here, when you're setting up this internal investigation, what are some of the key points you would expect the council to consider here?
Thanks, Paul. So I think there's a few key points that the council needs to address its mind to. The first is the question of scope. So you want an investigation that's broad enough to fulfill the purpose that it has, but you also don't want an investigation that's too broad for fear of it taking too long or not being able to get to a conclusion. So it's a question of balance, balancing letting the evidence take you where it takes it, where it's going, but also ensuring that the investigation doesn't become unwieldy. The second thing that I think the council needs to address its mind to is whether it has the expertise to do everything in an investigation and what support it might need. So, for example, does it need legal input on particular questions or to conduct certain parts of the investigation? Does it need to bring in forensic accountants to understand complicated accounting? Or does it need IT experts to preserve particular hard drives, emails, or electronic communications? Finally, I think the council needs, even at this early stage, to be applying its mind to the end game. What's going to happen to the report? Is it a report purely for internal purposes, or is it a report that it could be shared externally? And if it could be shared externally, who could it be shared with? Could it, for example, be shared with regulators or with others? And because all of those factors will affect how the council decides to pursue the investigation, and applying your mind to those at a very early stage is important to ensure you're not trying to pick up the pieces later down the line.
Great, that's really helpful, Tony. Let's pull up Tony's Tony's summary there of the key points in there. Something that's sitting behind all of that, just the last point that Tony was touching on there, is this question of the value of legal support and the ability to identify legal privilege, whether that's legal advice privilege or litigation privilege here. That was the subject of a whole other webinar, a whole other day. But in essence, getting a legal team to provide support can often help you identify the privilege that will allow you to protect the confidentiality of your investigation. Okay, let's move on and wind up this part of the case study that hopefully you've all been thrilled by. We've talked about the 3 R's here: regulators, recovery, and reputation. So the council should be thinking about these 3 R's. Tony's last point there about the end game, you should be thinking as the council here about engagement with regulators, financial crime police. When and how are you going to report the fraud to the authorities? You should bear in mind the timeframe for a criminal investigation. It will not be quick because it's an exhaustive and extensive process, which links into the second point here. Are you trying to recover losses that have been suffered? If the council is trying to recover losses, often there will be reasons why you need to make fast progress to get a matter into court or to protect your own position. So that may mean you have to think about a dual track approach, which involves reporting the crime element to the authorities, while also putting yourself in a position to be able to raise proceedings in the civil courts to protect your ability to recover your losses. We've also noted that the other option for recovery of losses is compensation orders that are granted by the criminal court after a prosecution. Again, all of that would come at the very end of a criminal case, and a conviction of, in this case, Big Bad Wolf, Tea Little Pigs, etc. So that wouldn't come very, very quickly. And the other point to make here, I think, is the criminal courts won't really have the same ability to investigate, analyse, and get into the detail of losses in the same way as the civil court does. The civil court's got a very strict process, as many of you will know, for identifying and valuing a loss. In the criminal court, the proceeds of crime legislation does enable the benefits of wrongdoing to be identified and recovered, but again, that's not within your control if you're not a party to that criminal case. If you're the counsel here, that's the prosecution that's taking that case forward against the accused person. And finally, going all the way back to a point that Ramsey was making at the outset, which is that if you are the victim of a fraud, that does give rise to reputational issues about how effective your own organisation is at fraud prevention. So you need to be alive to that, and also be alive to what type of communications you're going to be making in connection with this matter if it becomes public knowledge. So the 3 R's for us to think about here. I'm going to move on pretty quickly now to our final part of our seminar, which is around how do you protect against the risk of fraud arising in the first place, because we've just looked at what happens after the fraud has arisen, but how do you stop it from happening in the first place? And for that, I'll go back to Ramsey.
Great, thanks, Paul. These next couple of slides are going to identify steps organisations can take to protect themselves. I suppose a preliminary comment would be that no compliance system is guaranteed to remove the risk of fraud entirely, but importantly, steps can be taken to reduce that risk. I would say it's like playing against a talented striker. You can't guarantee they won't score, but steps can be taken to strengthen your defence and limited the striker's opportunities. So with that horrible football reference out the way, let's get into the guidance. Last month, HMRC issued guidance on managing risks of fraud within supply chains. The guidance splits the steps organisations can take into 3: check, act, and review. By check, we mean assessing existing compliance systems and business risks. By act, the guidance means understanding an organisation's supply chain. Who are they? And are you satisfied they meet your own compliance standards? And by review, the guidance means updating due diligence procedures and other compliance systems. Tony explained earlier that right now is a really important time to review those systems to address the changes in risks that have been brought on by the effects of the pandemic. And if we can, on that note, if we can move to the final slide, please. What does that mean in practice? Well, in reality, it's probably steps that many of those attending this webinar are already taking. It's auditing your own policies and procedures. Do they address the risk faced by the organisation today in today's climate? It's carrying out due diligence on potential suppliers and their directors before you engage with them. It's insisting on contractual clauses creating a right to monitor and audit supplier conduct, and it's actually using those contractual powers to carry out audits. Finally, it would be assessing supplier performance on a regular basis, particularly where they change their operating models. And the final point for me in all of this is that I'd encourage organisations to keep a record that the steps I've just mentioned have been taken. Having a clear record is useful for a couple of reasons. One, in the event of a fraud incident, it's almost a starting point to conducting an internal investigation. If nothing else, you know who your suppliers are, and you've got a reference point for looking at their conduct. And second, having a record of compliance measures is clear evidence for regulators and other stakeholders that the organisation takes anti-fraud seriously. And with that, Paul, that's me finished the practical steps, and I think we're moving on to the Q&A section.
Yeah, and so borrowing your pretty laboured football metaphors, we could say that we're probably going into injury time here in terms of how much time we've got left. We'll maybe use take a couple of minutes. We've got a few questions. We'll maybe take a couple of those questions and try and get everybody finished by certainly 1/4 at the latest, which would be basically 1/2 of a football match. I'm going to stop the Ramsey football references now and instead go to the question. So the first question we have from the Q&A is, what is the first step that everyone should take to protect against fraud? I suppose, Ramsey, that goes back to the slide you were looking at. You had a series of points at the end there of what an organisation can do to protect against fraud. But what would be the first step you would suggest that an organisation take if they're trying to get to grips with fraud?
Yeah, so I think the first thing to be done is to assess the risks within the organisation. They will be organisation specific. And also, of course, as part of that, to assess risks across your supply chain from a fraud perspective. Once those risks are identified, policies and procedures can be implemented. And by that, we mean specific anti-fraud policies and procedures. We see many organisations with anti-bribery policies and procedures, but we would recommend specific anti-fraud policies and procedures sitting alongside those anti-bribery policies and procedures.
Great. And what would you, in terms of the risk assessment side of it, maybe let's tell everyone a little bit about what is the actual step of a risk assessment? What does that look like?
Well, the first step is really understanding what the business does. What are the business operations? Where are the high risks that need to be investigated as part of any risk assessment? Is there, for instance, a customer-facing part of the organisation that creates a higher risk? Does the finance section of an organisation which is receiving and making payments create a high risk that needs to be investigated? So really, first things first is understanding the organisation model and going from there.
Great, thanks, Ramsey. Okay, next then, well, this is more about suppliers, I think. What should you do if you have concerns about a member of your supply chain? Tony, do you want to pick that up? The example we had in the case study obviously was a clear example of a concern with the quality of what a supplier was doing, and we moved into a discussion about investigations. I suppose something to think about here is, are there other options? Do you always move into an investigation, or what can you do if you've got a concern with a supplier?
Well, I think that's an important point, Paul. I think the first question is consider whether the concern raised is such that you're required to carry out an investigation or not. It may be that if it's a minor concern, a more informal approach can be taken in the outset, albeit at the same time that should be recorded internally to make sure that if something informal becomes more of a concern, that can be escalated appropriately. If you take the view that an investigation is going to be required, I think it's going back to the steps we've discussed. So you take the view that an investigation is required. How is that going to be carried out? What is the scope of that investigation? And who's going to carry it out? And what support do they need? So I think that if you have a concern, it's about taking that initial kind of triage decision about what steps need to be taken, and then following that through and ensuring all the time while doing that you're recording what you're doing and the reasons for it, and taking professional support if you're in doubt. Great.
Excellent, Tony. That's really helpful. Now, we'll squeeze one more in, I think, before we finish up. So the next question is it best simply to report fraud concerns to the police and let them get on with it? So Ramsey, what about that? Why would you not just tell the police about the fraud concerns and let them press on?
So we talked earlier about the benefits of an internal investigation, and my high level take on that is that it gives the organisation a degree of control as to the findings. Should you speak to the authorities at some stage in the investigation? Potentially, yes. At what stage? I suppose it depends really, and our view would be that there are two fundamental questions that will inform that answer. What's the ultimate driver to the investigation for the organisation? Are you solely interested in trying to recover lost funds, or do you also want to encourage the authorities to investigate and potentially prosecute the wrongdoers? And the second question is, have you identified enough material to credibly report the concern to the authorities? And that answer only becomes apparent after the internal investigation has been carried out.
Great, thanks, Ramsey. We have an injury time winner of a final question that's came in. Do you see lawyers, public accountants, etc., as being at high risk of falling victim to fraud? I'll maybe pick that one up to start with. On the pick the accountant side for a second. I think one of the key areas where you see that fraud risk arising for accountants is around the preparation of accounts and audit processes. And at that stage, you're relying, if you're on the accountancy side, you're relying upon the inputs of information from whatever the audited entity is or the company is. So certainly that is a risk moment. If you think about the risk assessment discussion that we had earlier and what that means, if you were sitting down and doing a risk assessment exercise for an accountancy practice, you would certainly be saying, as at the time we're moving to the preparation of accounts or auditing one of our clients, these are high risk moments for us. So I can certainly see that being a time when that risk arises. In connection with lawyers being at high risk of falling victims to fraud, that's, again, maybe we need to get somebody who's independent of lawyers to answer that question. To take the point from before, all I would say about that is certainly lawyers, and we know this from personal practice, are highly regulated entities. with sort of really highly burdensome money laundering requirements, for example. So how we manage client funds and how we manage funds coming into the business is something that's very closely scrutinised by our regulators and by legislation. So in some ways, the risk is always there, but there are strong processes in place in law firms to protect against those risks. But again, we've got to get somebody independent to answer that question, because the lawyers are always going to answer that question in a certain way. I'm going to stop there, because we've hit 45 minutes, and just to say that thank you all for attending today. As you can see on the screen, the final corporate crime webinar of the summer season, so to speak, is going to be on the Failure to Prevent offence. That's coming up at the end of this month, with another panel of speakers from the corporate crime team. So if you can join us for that, we'd love that. Please do. But otherwise, thanks very much for your time and attention today. And thanks to Ramsey and Tony for presenting the seminar with us. So thank you all very much, and goodbye.
Thanks, everyone.
Thank you.